Hi, I am Mahalakshmi, working as Assistant Professor of Commerce CA, V1 New Primal College for Women, Virudhunagar. Now we are going to see how we find out income from other sources under the income tax. If there is any income which is not taxable under first 4 heads of income, it is taxable under income from other sources like income from salary, income from house property, income from business and profession, income from capital gain. So this is the 5th head of income from other sources. Income includes under income from other sources are dividends, interest on securities, income from letting of machinery, plant, furniture and building, gifts, income from winning from lottery, crossword puzzles, races, card games, gambling or betting, employees' contribution to provident fund received by the employer, interest on compensation or enhanced compensation, amount received as an advance for transfer of capital asset forfeited, other incomes like income from royalty, director's fees, commission, etc., income from undisclosed sources, and income from subletting house property, etc. So now we are going to see what is dividends. So sum received by shareholders of a company on the distribution of its profit is called as dividends. So it is income under income from other sources. Then next one is interest on securities. If there is any interest on any security of government, debentures or bonds of the local authority, company or statutory corporation, it is come under the head interest on securities. Now we can divide the securities into two kinds. One is government securities and the second one is non-government securities. Here also we can divide the government non-government securities into two. One is tax-free government securities and then less tax government securities. Then tax-free non-government securities and less tax non-government securities. Now we can going to see this one by one elaborately. So first one is tax-free tax-free government securities. Right. It is fully exempt from tax under section 10(15). So if there is any interest received from government securities, it is fully exempt from tax. For example, here I have given few examples under government securities. 12-year national saving annuity certificates, national defense gold for bonds 1980, special bearer bonds 1991, post office cash certificates, national savings certificate, the national bank account, post office savings bank account. Here we can divide the savings bank account under post office into two, individual and joint account. Under individual account, the exemption amount is up to rupees 3,500. And then in case of joint account, the exemption amount is rupees 7,000. And then public account in post office, the exemption amount is up to rupees 5,000. And then gold deposit bond, etc. Then less tax government securities. It is issued by central or state government. No tax is deducted at source on such securities. Interest on such securities will not be grossed up. Interest received on saving bonds if exceeds rupees 10,000 is taxable. And then gross amount interest received, if you want to calculate the grossed up amount, interest received into 100 by 90. And the next one is tax-free non-government securities. It is paid by authority paying the interest. It is paid on behalf of the security holder. It is always grossed up. So the grossed up value interest received into 100 by 90. The calculating amount will be the income from other sources. And then next last category is less tax non-government securities. If the percentage of interest is given at the time in the problem, we are having the percentage of interest. So at that time we never grasped up. If the interest received is given, that is the amount is given, it is net amount, here we have to grasp up, so it will be grasped up. Then next we are going to see deductions allowable under income from other sources. So while calculating income from other sources, what are the deductions to be allowed? First one is collection charges paid to the banker for collecting interest. For collecting interest, if you want to pay any collection charges, that amount will be deducted from the amount received as interest. Then if employees contribution to provident fund, etc. Then repair, depreciation and insurance premium of machinery, plant, furniture and building. If there is any amount we have to spend for repair, depreciation and insurance premium from the amount of income from the machinery, plant, furniture and building. And then family pension received by the widow or legal heir of the deceased employee. The deduction allowable, the standard deduction up to 33 1/3% or rupees 15,000, whichever is less, is allowed as deduction. And then if there is any other revenue expenditure we have to spend while receive that income from other sources, that can be allowed as a deduction. Then 50% of interest received on compensation or enhanced compensation shall be allowed as deduction. And then the last one is inadmissible items. If there is any personal expenditure we have to met while earn that income from other sources, it is not admissible. And then payment of interest in a foreign country without deduction of tax at source. If there is any payment to be paid as cash, is if it is excess of rupees 10,000 or rupees 35,000, 100% of amount is inadmissible. And then expenses incurred or losses sustained regarding lottery, grassword puzzles, card games and gambling, etc. It can be fully inadmissible. If there is any expenses or any losses while from lottery, grassword puzzles, card game or gambling, is fully inadmissible. It is not allowed as a deduction. And then expenses in relation to exempted income. If there is any exempted income, if we have to meet any expenses, that is also inadmissible. So these are all the theory part while we calculating income from other sources. So I hope all you are understand how we can find out income from other sources. There is a last head of income under income tax through these slides. Thank you.